Good morning, everybody. This is Mark Sperling here for T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. This morning, stock futures are pointing to an up open despite a weak bond auction out of Spain. We're going to get a slew more of earnings this morning, but also we'll hear the existing homes number, as well as the Philly Fed. So what are you expecting going into trading today?
Well, we are getting a gap up open. This will be, after a week of downward action. We obviously had a week of upward action. So we're at the top end of our range. I would be taking off some trades, at least from a short-term point of view. We also are getting in the top end of our ascending channel, which means you probably have to lighten up on some positions. It's stock selection. We're in the slew of earnings season at this point in time. It's all about earnings. It's all about the stocks that come out, and that's where the action is going to be. That's where the volume is going to be.
Any specific levels you're looking at on the SPY or SPX?
I think, at this point, based on what I'm seeing technically, possibly could get to the 139. Obviously, 140 would be the top end of that range. Not sure it's really going to hit there today, but it's certainly something to look at. I don't think we get below 135.50 at this point for the next few days. Okay.
And you mentioned earnings. Last night we got IBMs, which were better than most people had expected. They even raised guidance.
IBM was up. It had a decent day yesterday, had some follow through this morning. It's now trading above its 200-day. Technically, that is good. It has repaired itself a decent amount over the last few months. Would I be buying it right now on a gap up to 193? Not yet. Let it come back down. Let it digest a little bit from a trading point of view. Back to 190, which is roughly the 200-day, is where I'll look to get a little bit more involved.
All right, in the sector spotlight, we're going to take a look at retail because this group, though it had taken a dip down, it seems to be bouncing off of an oversold. We seem to be in an oversold bounce. Let's take a look at Nike first because I know that's a name you're looking at. This stock took a huge hit June 29th when they missed their earnings estimates, but since then the stock's been moving upwards. Stephanie Link at Action Alerts Plus, she owns this stock and she likes it for a number of reasons, one of which is valuation. It's trading at 15.5 times earnings, which compares to 21 times historically. Pretty cheap there. In the second half of this year, we're going to get new products which will help build the revenue and will help on the cost line too. And these guys have a great balance sheet. So what are you seeing in the stock?
Well, I say once again, it's Nike. What does it matter? At some point in time, Nike always wins the race, along with Under Armour for that argument. But overall, it obviously missed earnings, so you want to wait, take a step back for a week or two, see what it does, let it digest the negative earnings, excuse me, and it has done that. It basically penetrated last week above the 92 level, which would be a trigger buy. And then you had 3 down days after that, which is what I like to see. Technically, I got back involved yesterday around 93 and change, and I'm still long, and I think it's going to fill the gap at this point in time. It's in the gap. I think you're looking at, roughly around 98, 99 for a short-term target for Nike, and then it will test its 200-day moving average at 99.
You want to take a quick look at Under Armour's chart too, because that's been showing some strength lately.
Well, again, I love to go after the name brands best in breed in a certain sector. Under Armour split, came back down to its 200-day moving average, basically held there, and seems to be working, forming a nice base, working its way back to new highs. Best in breed, that's where I like to be.
Abercrombie Fitch is another one that I know you've been looking at. This one's been beaten up. It's down about 26% so far year to date. I mean, they've gotten hit on their exposure in Europe and Asia, and as well as a slowdown in the U.S. Here, they've been closing unproductive stores, slowing growth in Europe, but it's been showing a little strength more recently as well. It hit 30.22 on June 26th, I think, and since then it's been up 19%. Do you think we hit a bottom in this one?
It seems like it's trying to find a bottom. I can't say best in breed. Abercrombie is not best in breed, certainly. You're trying to you're not going to get the same explosive move off the bottom. You're going to get a slow grind higher as the stock tries to repair itself. And technically above the 35.20, it did trigger a technical long. Tier 1 at that, tier maybe 1.5. Looking for a short-term target possibly to 38, 39. It looks like it's trying to form a little bit of a cup and handle, which is a bullish pattern overall.
Moving on to TJ Maxx. This is one that Stephanie Link at Action Alerts Plus owns also. It's a core holding for her, but she's been taking some profits in this one because the chart's been pretty good. In June, they beat comp estimates, raised guidance, and at 15 times, the valuation is kind of attractive, especially with fundamentals that just keep improving. What are you looking for as far as levels go in this one?
These discount retailers, you know, they're the ones that are moving up. The charts basically are almost all at yearly highs. What I'm seeing right now, it's a grind, a little bit of a boring grind higher, but back to 43, whether that looks like the 20-day moving average, 43.50 is where I'd look to be getting involved. For it seems to be making, you know, another move higher. It's not exciting. Look at the weekly chart. You can see there hasn't been any big exhaustive bars, so it looks like we're just going to grind higher here. You know, boring, but again, good looking chart overall.
Yeah, exactly. Now Macys, the chart doesn't exactly look like that. Citi was out earlier this week lowering their price target and cutting their earnings estimates. They think sales in July are going to be pretty weak, but the stock is trading at a 20% discount to its 5-year multiple. Is this one you can trade in?
Yes. I like when the market really isn't directional at this point, and I do believe that that's where we're at. So you want to find the stocks that have discounted and have good stories behind it, and then technically start to set up and repair themselves. Macys now just got above its 200-day moving average, above 34.40. That would be roughly a trigger long, and I believe it can possibly get back up to its top end, you know, mid-range, which is around 37.50. It's not going to be a barn burner, but at the same time, it looks good, and as long as it holds its 200-day moving average, I like it.
Getting back to best in breed, Costco, the stock's up 15% this year. The chart looks probably a little bit more like TJ Maxx, so not as straight up. What are you seeing in this one? Can it go up further?
Costco, like a Walmart, like a Target, they are big name brands, big cap stocks that quite frankly keep going higher. And you know, if you just start, it's been a slow, steady pace. This is a weekly chart. I think you're going to see minimum 100 on Costco. If we get an actual trending market to the upside, Costco will go higher. It looks great, and at this point, buy on pullbacks next to the 20-day, 21-day moving average.
Well, there you have it. That's our take on retail. We're going to take a quick commercial break and get back into the trenches with some of the stocks that are going to be releasing earnings today.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into the trenches with some earnings releases that are coming out today. First up, Philip Morris, ticker PM. They reported earnings this morning. They beat analyst estimates, and they raised guidance. This has been a go-to stock all year long for long-term investors who are looking for yield. These guys have a dividend yield of about 3.5%. The stock's acted pretty well this year. What do you think's in store for the rest of the year for this one?
It's not a name I play consistently. It's not a trader's name. Again, it's more of an investor type of play.
Right.
But technically, it looks great. It's going to be at yearly highs at this point in time. And so, from an investment point of view, I'd still be sticking to the plan and just keeping it.
Another one I want to talk about, PPG. Their earnings are probably coming out. They're coming out this morning. They may have just come out. The street was looking for $2.37 there. This stock was flat going into earnings yesterday. What are you thinking in this area?
I like high-level bases. PPG, the market got hit a little bit. PPG didn't budge. High-level bases above 100 over a few-month time period. When it gets back to the top end of the range, which is roughly about 107 and change, when it can break above there, that will be an aggressive move that should move a bit higher.
Chipotle, after the close, we're going to get a slew more of earnings. Chipotle is going to be one of them, ticker CMG. This stock, Citi upgraded to a buy earlier this week, putting a $490 price target on it. They like the growth story here. Now at 54 times earnings, some might argue that's a pretty rich multiple for this one. So what levels do you watch in this one? What do you think about the stock?
So This is one I actually do like to trade, and even towards the beginning of the year, this is one of my money makers, and I was just letting the moving averages play, respect themselves, and they kept moving up. Now, obviously, it got a little sloppy over the last few weeks. Coming into earnings, I still like the idea. I still like the play. It is a little bit of a real estate play. They got to find the best real estate. Every Chipotle I go into is crowded.
Yeah.
So technically, obviously, earnings are going to change a lot of this. You want to see it hold the 200-day 372, but realistically, every time it gets back to 390, I've been buying it. Right around 400, I've been taking some off. So I think overall, if it's a decent earnings play, you're going to probably see above 425, 430, possibly touching new highs. If not, you still like to see it hold. If it's bad, you still like to see it hold the 200-day moving average, 372.
Right, exactly. Another one, Google reports after the close. This has been a laggard in the high beta tech space for a while now. They've missed their last 2 earnings reports, and this has been in a downtrend since about May. So what are you expecting tonight?
I get a little excited when a company misses, such as Google, misses earnings 2 times in a row, discounted from 660 back to 580. Obviously, I think options are priced at this point for a 7 to 8% move, so you're talking $50 to $58, $55 to $60. So overall, I put up the weekly chart just so we can see what is happening. This stock has lived above the 500, 525 level at this point for almost 3 years, minus the 2008 level. I'd like to see it regain it's back to 600, above 600, and back to the 650 level. Ideally, that will get some other stocks in the industry back on track. We'll have to wait and see, but overall, I'm going to be a buyer probably above 600 either way.
Okay, great. And Microsoft also reports after the close tonight. This has been on an upswing for the last few days. Yesterday, the stock was up 2.6% going into earnings. So do you trade this today, or you just wait for the results to come out?
It's an investment stock, so at the same time, it hasn't done anything, and I'll put up the weekly chart for 1 minute. It hasn't done anything for a long, long time, for years. And that being said, I like to buy this anywhere from $29.50 to $30.50 with, I think, an eventual move back to the $33, $33.50. And I agree. I do believe that if we get a continued uptrend in this tape, at some point, Microsoft is going to be at new highs, all-time highs.
All right, great. Let's get into some quick hits. We'll start off with Facebook. Now, this stock saw its first update yesterday after 6 consecutive down days. This is one I know that Scott watches pretty closely. What are your thoughts on it?
He does watch it very closely. I don't watch it as closely anymore. Technically, not as pretty as I'd like it to be. But I do think 30.50, it could, it could get up to there, probably find some resistance at this point in time. Key resistance right now, 32 to 33. It's going to have a wall of stock trying to get above there. So at this point in time, that's what I'm looking for. If it gets back to 31, 32, you're probably going to get some more downward action or sideways action for it to, try to get back to its pre-IPO price of the 38 at some point in time. Right now, 30.50 would be the trade. The long trade gets there, I would take some off.
Green Mountain, next quick hit. This has been a really beaten up stock this year. It keeps, its downtrend keeps getting beat up. Can you own this one? Can you trade this one? Is this one you just completely stay away from?
I think stay away from or short on rallies at this point in time. When stocks become teenagers, we saw it with RIM, and we know where it is now. It's less than a teenager. It's $7. It's in second grade at this point in time, something to that effect. But GMCR could be going that way. Technically, it looks pretty poor. Obviously, it's heavily shorted, so you always have the chance that a short squeeze could happen. Technically, it's not showing me that at this point in time. All moving averages are pointing down. It looks lower to me. I wouldn't be necessarily shorting aggressively here. I would be looking for a rally back to maybe 20 for an idea to short. But intraday, I think every time it's up, 2% to 3%, you're probably going to have a chance to short it.
All right, Caterpillar. This has been kind of a weak stock more recently, but yesterday we saw an oversold bounce in it, and you were involved in it. So what were you doing yesterday, and how are you looking at it today? I'm
starting to see some bounces of these big boys and stuff that really has been forgotten. Whether it's dead cat bounces, whether it's trying to repair itself, I'm starting to see that a little bit more, meaning that lows are already put in, and now they're just bouncing around in ranges to make new moves. Caterpillar's at that point. It's not a real, it was a trade yesterday, not a swing. And at this point in time, 80 looks like a level that it should hold, respect it. And if it holds there, you're looking for a move back to around 87, $88. It is Caterpillar. It is, it is a big cap stock. So you just got to really keep it on the radar.
Moving on to banks, Wells Fargo. These guys reported earnings recently that were pretty good, better than expected. The housing market, according to them, is not as bad as you might think. But the chart's been pretty good too.
It's been good. It's been, if you best in breed, Wells Fargo, everybody leans to Wells Fargo at this point in time. So, it's testing at yearly highs, and it looks pretty good. And you look at the weekly, it's been pretty boring over the last, year or so. But overall, I like to go for best in breed when I'm going after an idea. And if we get that, if the market doesn't go anywhere without normally the banks, whether that has changed at this point in time with market dynamics, who knows? But best in breed, Wells Fargo does look the best.
How do you feel about JP Morgan? That was considered a best in breed bank as well, despite the trading blunder. But we seem to be moving past that pretty well there. You
can see, based on the arrows I have up right now, it's wedging, which means at the end of this wedge, ranges start to consolidate. At the end of that consolidation, you get a move, a directional move, one way or another. Whatever move that is, you jump on the train. So to me, most likely, the bad news is behind it. Once it, gets above the 3650, possibly the 200-day 3672, I think at this point in time, you're probably going to see a move back to $38.50 to $40 when it repairs itself. It still needs a little bit more time, but it's beginning to wedge, and the ranges are getting a lot smaller.
Okay, good. So going into earnings season, the key here is going to be stock specific. This is a stock picker's market now, would you say?
It is totally a stock picker's market. I've tried a few times stop and go type trades where I put on 20, 30 positions, and it lasts for about a day and a half, and the next thing you know, it totally reverses. To me, that just means I'm getting a lot more specific on my ideas, not putting a wide net out there, casting a much smaller net, maybe getting a little bit more aggressive in the few stocks that I'm playing, and hit a little bit more hit and run. Let that change. July, we're going to probably get the uptick. August, we might get the downtick. We'll have to wait and see what September and October brings. Normally, we'll get the uptick by the end of the year, but you got to deal with the ebbs and flows of the tape.
Right,
and
exactly.
Respect it.
Respect the tape.
Respect it.
Well, those are the levels in the S&P we're looking at today. Some of the sectors we're looking at, some earnings that are coming out today that you should keep your eye on. Be sure to check in at the end of the day for the daily recap.